Atul Suri of Marathon Trends joins us now. Atul, fantastic to have you back on ET Now. Thank you for joining us. Atul, I look at large cap stock. Voila, they are in a bull market and Nifty is moving from strength to strength. If I look at mid and small cap stocks, the selling has been excruciating. Some of them have made a comeback, but in general, that clan, that pack has still taken it on the chin.
Right. So I think what matters is what is the time frame you look at. If you start looking at data from Jan 2018, everything looks painful in the mid cap space, down 20, 30, 40%. However, when you invest, I think you don't invest for 3 months and 6 months. If you look at the mid cap index and even these mid cap stocks which have corrected, look at them on a 3-year time horizon. Look at a mid cap PMS or look at a mid cap mutual fund. You'll find that on a 2-3 year time horizon, they still are giving you very good returns. So it is just what data you choose to look at. If you look at from Jan to June kind of data, yes, it's very painful, 20-30%. But if you go back and look 2 years or 3 years data, you still find that the returns are positive. And this is very, very natural because see, we had a correction in the market, 10% on Nifty, 20% on mid cap, 30% on small cap. But the thing is that whatever has run up harder before that, you will similarly see a deeper correction. So the mid cap and small caps were far outpaced the Nifty and the large caps. So all those stocks which look pretty good right now, which have fallen less, etc. But if you look back from 2 to 3 year levels, they were really not the big runners. The big runners or the big excitement or the big money was made in these small and mid caps. So I think it's more a case of what has run very hard has to rest longer, has to rest deeper, and that is what has happened. So which is your starting data point? If it's Jan 2018, yes, it looks very bad. But if you go back and look at Jan 2015 or so, it will actually not look so bad.
Atul, I have only one question on my mind. Give me a stock which you think could be the next Apple of India. Not now, 10 years from now.
I wish I knew that. I think even the Apple shareholders never knew that. So I think that there are always surprises. And trends in our lives or markets are not just a one singular secular thing. You try to find the formula, you go back and go back on the spreadsheet and look for it. Honestly, there is nothing. You just live from cycle to cycle. And in this whole cyclical process, through the whole process of filtration, one of them makes it and we look back and try to look for reasons. But I think it's a very continuous journey. I mean, Apple has made it, so you're not talking about other fangs. Other fangs also are at breathing distance, but they've had some bad weeks prior to that. So I personally don't like to, I feel it's all about trends and it's about multiple cycles in those trends. Even like how in our markets, you had very good runs in mid caps, small caps, they have rested. Now new trends are emerging. So in a bull market, which I think we are in as far as the Indian context goes, it's not going to be a single linear stock that is going to go from 0 to 100. There are cycles. Yes, at the end of the journey, one stock will stand out, will be a marquee and will make it a case study. But I really don't think that at least I have the ability to know what it is. For me, it's more important about participating in every trend and hopefully getting it there right in each cycle. So you get somewhere there, which is, I think, good enough.
All right, Atul, you love charts, and that's what we should be focusing on this morning. While the Nifty chart is something that you've discussed over and over again, I want your perspective on what you're seeing on the FMCG index from a 3-year perspective, because Nikunj, Asha and I have been discussing this pretty much every single day. Look at the numbers, look at the volume growth figures. Is just looking so strong for these businesses, right? And you've particularly picked out this chart over 3 years to highlight that I guess the going still looks good.
No, I think that's a very, very valid question, and probably I think it's the most relevant question today. So we've had a 6-month correction in the market, and one of the times when I really like to do my research, or the winners of the next bull market are always found in corrections. And the quality these stocks show or sectors show is that when the markets correct, they correct less. And when the market stabilizes, they actually are the first few stocks to break out and run into new highs. So if you ask me, what is my big learning in the last 6 months, or what is my big observation in the last 6 months, I think the theme that is going to dominate our markets is consumption. FMCG is a part of it very narrowly, but consumption you can look at a broader definition or a broader canvas. I clearly think that going ahead in the next few years, the theme is going to be consumption. And you are not only just, you're not only just, as I said, seeing it in price performance, you're also seeing it in numbers. Whenever you recommend one of these consumption stocks, FMCG stocks, the normal complaint is, you know what, they've run up too much or they're too expensive. But I feel the numbers are coming, and if you still just keep waiting that it is too expensive or it has run up too much, and I think you will keep waiting, the market will force you to get in some way that will be near the top. So I feel that the big theme that stands out for me in the last 6 months is the way consumption stocks have performed during the correction, and I think they are going to be leaders. So from the 2 or 3 year time horizon, whether it's FMCG or a lot of other consumption, it's food related, it's attire related, and many other themes that can come under the consumption definition, I think are going to really dominate the market. The only challenge is the fact is that they've run up too much, they are too expensive, but you will have to bite the bullet, and I think that there will be money made. There are, I think, very sweet trends ahead. For me personally, in this correction, the big activity is to really realign my portfolio and to get overweight consumption. They have held on very well during the fall, so that has been good, but more importantly is that post the fall also they are leaders, and with the kind of numbers that are coming, I think it reinforces my belief. So clearly I can say that I think going ahead, the way I am positioned is to see consumption as a leading sector for the next 2 to 3 years.
You understand the importance of cycle much more than anyone else. All markets, they go through a cycle. There is a boom phase, there is a bump, there is a bust phase, there is a phase of consolidation. Now some of these FMCG stocks have been in some kind of an epic bull market for many years now. There would be a time at which you would say that, look, they will get aged and they will start reversing. Are we nearing there yet? Or you would say, doesn't matter to me, all the age talk, don't talk to me when I'm 40 plus, I'm a fit guy, and that also applies to FMCG companies, earnings are strong and they will continue to go higher?
I think the bull market is just starting. I think it's just starting. We like to talk about it or look at them in the very short term. But if you look for many years before that, they haven't really done much. In fact, they have been relatively underperformers, and most people holding FMCG got frustrated and at some stage dumped it. It's only those who have been patient and who have held on have really sort of participated, and I think it's the start of a bull market, as I said, in FMCG and a lot of other stocks which come under the consumption theme. So look at this canvas as much broader, and you'll find a lot of stocks which at least technically are spectacular, and even the numbers that are coming are surprising on the upside. So just about limiting that, oh, this should be the PE of the market or this should be the PE of the sector, etc. I think that is all history. That's good for the history books, but market is dynamic. It throws out new trends, new price movements, and we have to be there to interpret it, to interpret the new developments or the way things are. I mean, look at the Indian markets for that matter. Look at the whole MSCI emerging market index. Look at most global markets. They're who's at lifetime highs and galloping away. So these are things which if you correlate MSCI emerging to India, you'll find that it is a different paradigm. It's a different kettle of fish, and that also keeps happening in our markets. So I think that this whole thing about FMCG consumption stocks being overvalued, having run up too much, is something you better throw it out, because you are going to get into it. Better get in sooner than later. And I think that there's going to be a very big trend ahead, and it's already in progress.
Joining in. And let's discuss something what's happening around the globe, and 2 talking points: trade war and what's happening to currencies. And Chinese market is something which I want to take your opinion on, because they are near their 52-week low, and we are seeing this trade war probably impacting them much more than any other country at this point of time. And the strength in dollar index, and especially what we learned recently, that there's a lot of JPY dollar trades which have happened, and in past we have seen that how yen carry trades do impact global markets. Your observation, what's happening in Chinese market and dollar index, and probably if you can touch on JPY as well.
So the Chinese market again has always been a very deviant market. If you go it never really seems to be part of the global cycle. It has a mind of its own. So when I look at the charts, whether I look at the Shanghai or whatever, the A shares, it really doesn't bother me because I don't think it's going to have a massive knockdown effect on global markets. Like when you see the US charts and you see them suffering or there is a risk, you know that you can extrapolate the theory. But I think that the Chinese market charts, which honestly are horrendous, I don't think are going to really put a very big pressure on global markets. It may affect the MSCI Emerging Market Index, and that is why that's another chart which is not really looking very pretty, but I think it's the way the components are. I feel India, to some extent, I'm getting more and more convinced is fairly not so correlated with the whole EM basket, you know, and the kind of chart patterns that we have, the kind of leadership that we have, the way we are behaving, I think is a very standout market. So that really makes, as you know that I'm a medium to long term bull and very bullish on this market. So this actually reinforces my belief. The second thing that comes about is about the dollar index. I think that is something that is a red flag for me, because the dollar, the DXY beyond 95.5 or thereabouts, I think can be a little bit of a worry, and that will create short-term kind of pressures, pulls and pains, especially in the EM currencies, bonds, and also then in equities. But I think let that happen because it's somewhere there, it's somewhere just below there and kind of struggling. I think even with US bond yields around 3%, you know. So I think let the breakouts happen or let there be triggers for us to be really worried about. But still at the moment, I think I'm really focused on the character, behavior and nature of Indian markets, because they really are showing that they're pretty uncorrelated to what is happening in China, or what's happening in a lot of EM baskets. We are kind of standing out as a market, the way we are behaving in terms of price trends. So I think that is very positive. And you know, in India, yes, you know that there has been a big Nifty rally and a lot of people are talking about mid caps, small caps, but I've addressed it earlier. I think there also you will see a big catch up trade happening. Not everything will go up like it was maybe a year ago, but I think qualitatively wherever there is going to be good performance and things like that, I think the markets will pull up. I feel the fall was more technical in nature, a lot of margining systems, etc. But you see that as they are easing out, stocks are bouncing back. But you need to be selective in those spaces. So all in all, I still continue to be very bullish on India in the medium to long term. And I think in the short term, what has really happened has surprised me. You go back 2 months ago, nobody would have ever told you it's going to touch a lifetime high. And I think that the market is powering towards almost 12,000 on the Nifty before the end of the year. So I think it's a standout market, standout opportunity. And you have some sectors that are clearly, showing you that these are the makings of a big trend. So I think it's a great opportunity. India has been. You just have to be optimistic and not get depressed with all the news around. I think it's one of the best places to be in the world right now as far as global equities go.
Good to hear that. Atul, a lot is also dependent both on a macro as well as micro basis in terms of sectoral movers as well on crude. Off late crude has gone a little sideways. Are you getting the sense of where crude may be headed directionally, or is it still a big black hole?
I think crude has actually disappointed me. I thought crude would have cracked. The 71, 72, I'm talking about Brent, that's what I look at, is a very important support area for crude. And I feel that, I thought if you asked me a week, 10 days ago, that it would have broken that. And I feel that we can head much lower back to the 65 areas, which tends to be an area of comfort for the Indian economy and most other participants and companies. So for me, I'm looking at this 71, 72. I'm not trying to preempt it, as I said, but I feel that if the 71, 72 band in Brent breaks, I think crude is in for a sharp slide, and that could be another positive trigger for our market. But yes, at the moment, it's, I would say, misbehaving a bit. It's tending to, jump up, go to 73, 74. So that will be an area of worry, but I kind of feel that this level of 71, 72 will get taken out. And if that's taken out, that's going to be another positive for Indian markets. So hoping, fingers crossed, but it's not very pleasing at the moment. But I think that's the way the market is. Everything can't be great.
Up two charts, Atul, that you highlighted, and if my producer can just fire them back to back. One is what the Nifty is expected to do according to you over the course of the next 3 years, because I get asked that question many times. The charts will tell you one story, but you have an election risk as well in the middle, which we need to contest with. And the second is what the 10-year benchmark yield is indicating. We rarely correlate these two charts, but there is an element which will drive earnings, which will then fuel the markets, and those earnings will be dependent on where rates are. So how do you correlate what the 10-year yield, treasury yield is telling you versus what the market trend is looking like?
So as far as the Nifty long-term chart targets, I think I've been saying it for over a year now, 17,000 by 2021, which would amount to a 15-17% index move compounded for the next 3 years, which I think is fantastic because you'll find that stocks will outperform that by a wide margin. So I think that is the big opportunity for Indian markets. The issue that comes up, it's very interesting that I meet clients, and every time, depending on where the index is, clients find new reasons. Like 6 months ago, I went for a client meeting that was in Jan. People were very worried about a nuclear war. Somehow I don't have it factored in my spreadsheet or in my mental model. The problem was North Korea, South Korea, and today, they're hugging each other. Then you had some issues when I think Karnataka elections happened. Everyone are talking, what if Modi loses? And suddenly now at new lifetime highs, people don't seem to be talking. So I feel that all these things are very much invented by the mind, imagination and media, and it's more dependent on what the index is doing. If the index is up, all these things vanish, and the day the index is down 100 points, all these things sort of seem to come up. And I never seem to bother about them because honestly, what is my competence? What is my competence to know that whether Mr. Modi will come to power or no? The answer is I have no competence. What is my area of competence is markets, charts, technicals and trends, and that's what I focus on, and that's what I prefer to be focused on. And the markets I've seen in earlier election things have a very intelligent way of pre-telling you all that. So I have to keep my mind tuned with the markets. The markets will tell me what's going to happen, and that's the best I can do because that's the best I know. And trying to philosophize and talk about global nuclear strikes and politics in Russia, etc. Sometimes I think is just time pass. It's just something we invent to fill our minds with. So I prefer remaining in my core competence, which is markets. And markets tell me that irrespective of whatever happens, we will see a market at a 15 to 18% growth for the next 3 years, 17,000 Nifty by 2021. I've been in record for the last 1 year when markets were very different, and I still maintain that. I still maintain that even during the correction. So that's my view on Indian markets. Focus on the markets rather than all those extraterritorial things which we really don't know anything about. Number 2 is about bond yields. I feel that yes, that is another area of concern, that in the short term I feel that they have been a little spiky, but I really don't think that they're going to be a runaway case. I feel that we have seen the best of the spike, or the best of the move, I think, is behind us. Yes, we may sort of consolidate and thereabouts, but I don't think it's going to be headline news for us. I think it's going to sort of be a little tempered. So for the short to medium term, that really wouldn't take my sleep away. I still would be focused on market trends. I still would be focused on sectors where the leadership is, and I still would be focused on my pet theme right now, which is consumption.
Comments. If you have to draw a parallel between the 2003 and the 2007 bull market versus the Modi bull market, which started in August 2013, where are we in terms of the longevity? You think the final hurrah or the final bust is still left?
No, I don't think so. I think we are somewhere in the mid space. We've had a very good bull market, and we've had a correction. In fact, I think this correction has been a dream correction because you just had a 10% fall in the index. Nikunj, if you go back from 2003 to 2008 bull market, I keep saying it, we all term it as one bull market, but do you know how many times the market hit downside circuits? And we've seen nothing like that. The kind of volatility that was there in that phase, we still term it as one big bull market. So what we've had in the last 6 months has actually been an opportunity. We've had, I think, a pretty shallow correction. Yes, some of the mid caps have fallen large, but I think they will also bounce accordingly. I think we've had a dream correction. These corrections are very, very shallow compared to what we had between 2003 to 2008. When the index goes into a down circuit, what happens? And what happens to stocks? and these things took very, very long to recover, and they were very painful. So I feel that we are nowhere near the hurrah or whatever. I think one should not, really sort of make a big scandal and all this negative news and cloud people's minds. The fact is that I think we are in the mid stage of this market. I think we still have to see a lot more on the upside, and I feel that we still have a 2-3 year kind of run. Yes, there will be corrections, there will be bad days, bad weeks, bad months, bad quarters, but nobody ever said that equity markets always have every day positive. The only way you can have a positive day always is you invest in a bank fixed deposit, and for that what sort of returns you get. Volatility and ups and downs are a nature of the market. Look at the bigger picture, ride the trend, identify it, and whenever the trend changes it will let us know, and then you can get out, maybe not at the top but somewhere there, and that's going to be good enough. A fantastic journey. There's going to be no other better journey in Indian markets, investment markets, financials, non-financials, than Indian equity at the moment.
Now, one thing what we've also seen with previous bull markets is that the uptrend does not change, but the leadership sometimes changes when we see a shakeout. Could we see a change in the leadership patterns, whereas Nifty will continue to forge higher, the Bank Nifty will continue to forge higher, but will there be a change of baton? So from HDFC Bank and IndusInd Bank, it could move to State Bank of India and ICICI Bank. Could that happen?
So I don't agree with the theory of whether it will move from HDFC to SBI, because that's speaking stock specific and I'll avoid that. But sectors change and themes change, and that does kind of happen in the market. And as I said, that a sector or a theme that had really propelled the markets higher was the mid cap and small cap theme. And through this correction, it is telling me that yes, this is going to take a pause. Quality stocks are going to bounce back, but it's not going to be so across the board. I think that the biggest theme or the mega theme that is dominating Indian markets is actually the private sector financials. If you see that these were doing well before the correction, these held out very well in the correction, and I think they will go ahead and still continue to be outperformers. So I think that the mega theme that is there in Indian markets are the private sector financials. And the theme that is setting out, which I have again spoken a lot about, is in this correction I'm seeing that the bait and moving is towards consumption. So for me, that is really going to be the theme. You may have a little bit of a surge in PSU banks, but if you ask me that is there going to be a trend reversal, I don't think so. I think private sector banks, they have run very hard. They've done great for the last few months, even in the fall. They may take a little bit of pause, but I think they will restart. That does not mean PSUs will not do well. They have a very big catch-up trade to do. So I think financials will continue doing very well, and I think they are the big theme or the mega trend in this whole bull market. And we will keep having corrections. We will keep having some sectors that fall out, some new sectors will come up, and I think that is the job of a fund manager, to keep the portfolio aligned with the next theme, because ultimately that's where you will get outperformance. I mean, I just want to point out, that we've had a spectacular last month in July, 5-6% on the indexes, and people have been only talking about financials, but nobody's talking about Reliance. Reliance has been up 21% in a month, upward of 20%. When did we last see that? So I think that there are a lot of such stories that are happening in the market. People may not be covering it, but I think one needs to really go back and see what happened to Reliance. And I think it's a stock that's pretty underweight in most portfolios. Nobody's talking about it. I think it's not so widely covered, or not. It doesn't have that kind of euphoria, hurrah that we have seen earlier. So I think that there are a lot more deals in this card game still left, and these could be some interesting plays.
About midlife crisis, trust me, I know what you are meaning at when it comes to midlife crisis, and what age we are referring to. No pun intended, but I guess midlife crisis is a challenge with a lot of people have to deal with, right, Atul?
Yeah, that's okay. I mean, actually, I kind of never experienced it. I find a lot of people talk a lot of things. I think a lot of people talk a lot of things. This is going to happen, that is going to happen. I think you just happily cross it and you say like, hey, what were they talking about? Like, this is nothing. Just go on. It's a beautiful journey. Celebrate life and go on. I guess these are all cliche terms which people make, but enjoy the moment, celebrate the markets, ups and downs, part of it. But that's life.
Okay, well, that's Atul Suri for you. Remember, life is all about celebrating and enjoying. And you know, I've had the chance of meeting Atul personally a couple of times. And it's always a pleasure to meet Atul and understand about his scuba diving and understand about other things apart from charts.
The diet and the workouts. Okay, Atul, always great having you on the show. Thanks so much for taking the time out.
Thanks.
What are we doing
Thanks.
for the market?
Always good to be with friends. Always good to be with friends.
Same here.